Welcome to Illuminati Silver. We tell the truth about silver. Today is Tuesday the 23rd of February 2021 and we're looking at gold rising above and holding above $1,800 and silver rising above $28 but falling back. And what this means moving forward. So let's take a look. On Saturday, we produced our gold and silver weekly update for the weekend in the 19th of February, where we suggested that although gold and silver should rise this week, we still expected gold to trade broadly within 1750 to 1850 and silver between 2650 and 2850. And on Sunday, we produced a video entitled "Are Equity Markets on the Economic Precipice, or do they have further to run?" where we highlighted that equity markets are likely to move higher, though eventually they will run out of steam, but we added these following words, quote, "So while gold and silver are languishing currently, and gold particularly appearing to be out of favour, if only momentarily, and the investment space and headlines are certainly being taken up by the crypto story, we can see significant funds still moving into equities. When this stops, of course, precious metals will benefit, but it may still be a year or two before that really starts to happen. Though short term, we are more positive silver than gold, simply because of the expected uptick in industrial demand that any economic recovery will engender," unquote. Well, gold markets opened on Monday actually quite strongly, rising from $1,784 to $1,812. And today, Tuesday, actually touching 1,816, but has since fallen back to 1,805. Still above the $1,800 level, the psychological sort of resistance level, now potentially support, and $21 higher than Friday's close. Silver markets also rose strongly on Monday, peaking at $28.27, and peaked further today to $28.34, but has since fallen back to $27.70. This is still 42 cents higher than Friday's close, but it hasn't managed to hold above $28 for too long, and it's very important that it actually achieves that. Now, a quick examine at today's fall from peaks are a mix of a stronger dollar index, up 0.12 at 90.13, and a rise in the equity markets. Currently, as at 2046, which is when this has been produced, GMT, the Dow is up 117 points at 31,638. The S&P 500 is up 13 points at 3,889. And the Nasdaq is down 24 at 13,508. Now, what we've seen so far this week is the S&P CoreLogic Case-Shiller Home Price Index rise from 9.5% to 10.4% year over year for December. That's the strongest annual growth rate in over 6 years. In fact, it ranks as one of the largest annual gains in the 30-year history of the actual index. Also, the FHFA Home Price Index rose from 11% to 11.4% over the same period, and interestingly, the Consumer Confidence Index for February has risen from 88.9 last month to 91.3. So as we mentioned on the weekend, Fed Chairman Jerome Powell was giving 2 days of testimony to Congress. And today he stated that inflation and employment will remain well below the Federal Reserve's goals, meaning easy money policy or monetary policy is likely to stay in place. Now, despite a sharp rise this year in bond yields, that has accompanied heightened concerns over inflation, but Powell said price pressures remain mostly muted. Now, for gold, the 10-day moving average, in view of this, is resistance at $1,816, and support currently is at $1,796, with $1,764 underlying. Day traders will look at both a bearish and bullish scenario. A sustained move under 1807 will indicate the presence of sellers, and this could trigger a late session break into the support level at around 1787. A sustained move, though, over 1807 will signal the presence of buyers. This could trigger a rally into the retracement zone resistance of 1819 to 1833. Since the main trend is down, sellers could come in to defend the trend. Now this morning, silver showed some strength and looked quite bullish, but failed to sustain the quite significant rise in the past 2 days now, its relative significance. The outlook, though, is still bullish, and we await further testimony tomorrow from Jerome Powell. As mentioned on Saturday, there is much data to be announced on Thursday and Friday of this week. Now, Bitcoin too has fallen back in the past couple of days from an all-time high above $58,000, which happened on Sunday, to $47,900, which is its current price, almost $11,000 fall. Now, Bloomberg has reported, we'll just reveal a small quote here, the S&P 500 index erased a drop and climbed higher after reassuring comments from Federal Reserve Chairman Jerome Powell on inflation and the outlook for growth spurred traders to buy the dip. As Powell reassured investors on stimulus, he voiced expectations for a return to more normal, improved activity later this year and said that higher bond yields reflected economic optimism, not inflation fears. That helped fuel a return to the buy-the-dip mentality that has limited equity drawdowns in recent months, with investors betting on a global economic recovery spurred by vaccines and US spending. Leo Grochowski, Chief Investment Officer at BNY Mellon Wealth Management, said in a Bloomberg TV interview, quote, "There was something in there for everyone today. Powell did recognize medium-term improvement in the economy, but I think laid to rest some percolating inflation fears," unquote. Now, on the back of that, it's worth looking at some bond yields, because obviously these have some significance. The yield on the 10-year treasuries fell 1 basis point to 1.36%. Germany's 10-year yield jumped 2 basis points to minus 0.32%, and Britain's 10-year yield rose 4 basis points to 0.72%. For those of us traditionally schooled in both monetary and Keynesian economics, it is quite difficult to get one's head around minus interest rates. It's quite a fascinating subject, and one numerous theses and doctoral theses will no doubt be written about, if not already, then certainly in the years to come. Now, on the political front, President Joe Biden addressed the nation as the US mourns 500,000 people lost to COVID-19. The US Supreme Court rejected former President Donald Trump's bid to keep his tax files secret from a grand jury, thereby ordering him to hand over his returns to prosecutors. We suspect, obviously, that those will leak at some stage in the not-too-distant future. On the banking front, interestingly, and this perhaps supports some of our previous views on China, HSBC has signalled its pivot to Asia, outlining plans to invest about $6 billion in the region. It's targeting wealth management and commercial banking to drive double-digit growth, and has singled out Asian markets such as Singapore, China and Hong Kong. The strategy update came as HSBC reported a 34% drop in profits for 2020, partly due to the impact from COVID-19. So we can see that, certainly as far as HSBC is concerned, but we're aware of others, that it is seeing Asia as being the major growth area out of the current pandemic crisis. So where is gold and silver heading from here? Well, we suspect both are consolidating, at least for a short while, potentially going a little lower, but then we are seeing these oscillations, and so we're not going to really predict at this stage until we see more economic data, which will be announced later in the week. But equally, we're not envisaging anything dramatic either. So we're sticking with the price ranges that we positioned on the weekend. What is interesting, particularly today and yesterday, is the fall in Bitcoin and cryptocurrencies generally, as a number of large firms express concern about its recent price rise, and even people like Elon Musk has shown some surprise at how quickly Bitcoin has risen so soon. How that plays out, we shall comment on a separate video. Meanwhile, that's it for today. Please share your thoughts about what you think is happening to gold and silver. Are we just oscillating within a modestly tight band, or are you expecting a breakout? We're not quite yet, but we know one is not that far away. Do share your thoughts, and also if you haven't already done so, please subscribe to our channel. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.